Hello and welcome, viewers. I'm Hiral Daria. Let's quickly welcome in Kunal Shah as well to understand the commodity strategies for the day. Kunal, my first question coming to you here is especially with regards to crude. Not a strategy, but just your outlook that we need is since last Thursday, as we've been mentioning, that oil prices have really rallied. Now, if you could just help us understand two things. Why is there this kind of retracement in oil prices? And number two, is there a possibility that crude could actually touch that $40 per barrel mark, at least in the near term?
Hi, good afternoon. The first part of your question, why this kind of volatility? Well, in this kind of volatility exists in all asset classes. Now, there is a speculation whether this kind of production cut will take place or not. Because if you
Hmm.
look at the financial markets, in the history of financial market, we've never seen, I have not seen in my career 15 million barrels of production cut by oil producers. So this kind of this quantum of production cut, whether they will agree or not. So there are some groups who are saying that this kind of production cuts cannot take place, and another feel if they don't, where they will store the crude. So much depends on what is going to happen in tomorrow's meeting. If that meeting takes place, even there is skepticism whether that meeting will take place or not, because they had kept this meeting on Monday and they suddenly postponed from Monday to 9th of April. So if this meeting doesn't take place, then obviously oil is going to correct, because without intervention by OPEC plus, without cutting the production, crude oil cannot go up at all. There is no chance, because we are seeing a 15 to 20% demand destruction globally. So
Hmm.
that number comes to 15 million to 20 million barrels. So we need another 15 million barrels of production cuts in order to have the stable oil prices. So it is very difficult to forecast for me right now to say that tomorrow that production cut. But the sanity says that there has to be a production cut, and there will be a production cut. Else, there are countries who doesn't have capacities to store crude oil. So I think sanity should prevail. For WTI, it can test $35, for Brent 37, $38, but not above that. If there is a
Hmm.
production cut of 15 million barrels, then we'll see a spike. But barring that, the fundamental doesn't seem very bright for crude oil, because the moment there is a recovery in global financial markets, at that time you will again see oil demand will shoot up and they will again start the production.
Absolutely.
So yeah, so it is the structural view on oil definitely bearish.
Right. So, Kunal, very quickly, in terms of the production cut decision that could come out of tomorrow's meeting, number one, what is your expectation as to how much would they actually agree in terms of the cut? And number two, what is the actual requirement that is needed to get this kind of stability in crude prices?
I believe that at least 15 million barrel of production cut is required. So even if there is a 10 million barrels of production cut, oil prices will drop after the meeting, because they are factoring so if any number which is less, some heavy selling pressure on oil, because that also will lead to 7 to 8 million barrels of glut in global oil market. So my recommendation is, watch out for the number. Anything above 15, very bullish. At 15, bullish. You will see a spike of 3, 4, $5, and anything below 15, you will see
Hmm.
again selling will persist in crude oil.
Right. Kunal, moving away from crude again, all eyes have been what's happening with gold. Now, what's the sense that you're picking up right now, especially in terms of where gold is concerned? What should be the strategy? Because overall, again, from a longer term perspective as well, you've time and again mentioned that gold is a safe haven. Gold is going to be one of the assets that are going to be highlighted as well from here on, at least with the next 1 year's perspective. Short term, again, what are you looking at? What should the strategy be?
Okay. Short term, for trading perspective, I will still recommend to go long, buy at dips. Simple. The main reason for that is, what we are going to see is, in spite of the strength in US dollar, gold prices are moving up. So
Correct.
yesterday we've seen a profit taking on Comex, but the trend of Indian rupee seems to be on the weaker front. So Indian rupee today also weaken, and it's going to weaken further going forward. So that is also going to help the bulls. And second is, after some bit of correction yesterday, I don't see any major drop and anything like that. So I think for trading perspective, keep a strict stop loss of 44,690, go long and book your profits around 45,100.
Right. But any impact that you're seeing, especially on the back of a slowdown in COVID-19 cases, do you think that's something which is actually getting that ease in terms of gold prices?
Well, if you look, roughly 1.3 million cases. So the number of cases, the way this virus has been the multiplying in last 7 to 10 days, the speed is moderated, but every day still we are getting significant cases. So I think it's now the curve is flattened, but it doesn't mean it is going to drop sharply. We have to wait for that evidence. So when that takes place, you are going to see some bit of profit taking in gold. Investor will start taking some profit in gold, and they will again park their money in the riskier asset. But I think there is still more time to that. So I think till then, going long is recommended. To all the viewers, Indian gold is trading $40 below the international gold parity.
Hmm.
So because all the Indian refineries are closed, there is no fresh imports going on. So Indian gold is available today $40 discount as compared to the COMEX prices. So now assume that Indian lockdown is open. So Indian lockdown begin. The government is no longer continuing with the lockdown after 7 days. After that, what will happen if the government starts importing gold? This if COMEX prices starts going down, Indian gold prices will not correct more.
Right. So, Kunal, are
So
we trying to say that there is some bit of volatility here and traders are staying pretty much on the sideline because there is that little bit of dislocation that everyone's looking at?
yeah, the physical trade is off. India is an importer. India doesn't produces their
Hmm.
own
Hmm.
gold. So even if I want gold today, I cannot go to a jewelry shop and buy gold, or I cannot import gold today. So the
Correct.
entire physical trade have come to the standstill. So we have seen the major disparity. So ideally speaking, gold should have been trading at 48,000 on MCX, but it is not, because international prices moved up, but Indian prices are not moving up because of the slowdown. So right now, MCX is not acting completely in line with what is happening in the international market. Our domestic scenario is playing a major role right now.
Right. And overall, with gold, very quickly, what's the view that you hold right now in terms of silver? Because, yes, we have seen a solid rally even in silver as well. But are you expecting that up move to continue? Because, again, even from the precious metal side, if you see platinum, that's actually trying to catch up with silver and gold, but it right now seems pretty much stuck in the mud. It's attempting to, break out new levels. But do you think there is a possibility that platinum could also go through that 750, $760 level? And if that opens, what's the next level that we can expect where those are opened?
See, as of now, when we are discussing everything, I think there is a statement that lifting lockdown doesn't seem possible. So this is not good for going long immediately for gold and silver on MCX, because what happens is that even if international prices goes up, India will not go up significantly because of the lockdown. So the trend for the longer horizon is definitely bullish, no doubt about, no second thought on that. But in near term, in silver, we are not expecting it to go up and test level more than 44,500 maximum upside. I'm not expecting silver to go above those
Hmm.
levels. So in near term, maximum 44 to 44,500. On the downside, 42,000. And it is not completely going to act as per what is happening in the international market. There is going to be a disparity. So international may be up by 3% and India will go up by 1%. So that kind
Right.
of scenario, traders and everyone should be ready.
Right. And very lastly, your strategy in terms of where industrial metals go, you're positive pretty much on zinc today as well.
Yeah, I think global zinc production is going to decline. All the major zinc miners are going to cut back their production, and hence this metal is going to be in the deficit of 3.5-4 lakh tons. We have seen a significant rally in copper. We've seen a good rally in
Hmm.
nickel.
Hmm.
So I think the one metal which is underperformed is zinc, and I think going forward it has potential to test levels of 152 or maximum 154. So I continue to remain long on zinc.
Right. So that's a long coming in on zinc, a positive view coming in on gold. And crude is something that we will have to actually keep our eyes on as well, Kunal, taking cues as to what comes out from tomorrow's OPEC plus meeting and what's the quantum of production cuts that are decided. But thank you for joining us on the show and getting us
My pleasure.
those commodity strategies for the day. We will touch base with you tomorrow as well. Thank you.